soon. For the time being, though, let's turn our attention to Honeywell. Well, they reported a mixed set of numbers, good growth on the top line, though margins were a little bit under pressure. To discuss what happened in the past quarter, and more importantly, what's the way ahead, we're joined by Mr. Ashish Gaikwad, the Managing Director of the company. Hi, Mr. Gaikwad. Good to speak to you as always. Well, your gross margins were maintained, which is a positive. Close to around 47, 48%. It's been in that vicinity. However, the EBITDA margins got diluted because other expenditure spiked up. So explain to us what went on with that other expenditure. That's the reason why the EBITDA margins did see a miss.
First of all, very good morning to you and all your panelists. Nigel, let's look at the good things first. As you mentioned, we had reasonably good gross margins. Also, if you look at the order book, it is about 41% higher than the previous quarter of the previous year, right? And so we are looking at the growth that is coming in, which is building the backlog. The revenues also have gone upwards of 18.5%. So I think that's going well. And that gives us the backlog to burn over the next few quarters. And lastly, the earnings per share, they went up as well. So that's a good part of the story. You're right that there have been some pressures on the margin. I don't want to get into the other costs that have come in, but essentially this is about three factors that are affecting our margins right now. So the first one is, of course, the competitive market. The domestic market is growing in India compared to the stable exports market. And therefore, that puts pressure on the pricing when we compete. The second is about our long cycle businesses, the projects businesses, where we take fixed price contracts, most of them. And therefore, when there is inflation and the input prices go up, then that affects the overall margin. And the third one, I would say, is there were some one-timers that came in and we had to deal with those. So that has kind of impacted overall margins.
Okay, all right. Mr. Gaikwad, just to confirm that number, the order intake is up by close to around 40% on a year-on-year basis. Yes. Is that correct?
That is correct. Absolutely.
Oh, so you're well placed then for growth from year on. I just wanted to further dissect the revenue number. A couple of years in the middle, the export contribution went down, which in turn put pressure on margins. Now that perked up back to above that 1,400 crores for the past year. For this year, what kind of a contribution are you expecting from exports? And for the exports part of business, what kind of growth should we look at? Mid-single digit? Should we look at a double-digit growth?
Yeah, that's a question that you have always asked, Nigel, when you look at Honeywell. So first of all, when you divide the pie into exports and domestic, right now, the growth in the domestic market is really good, and we must make sure that we participate in that growth in the Indian market. So when we do that, certainly exports, the overall size of the exports pie starts to look a little lower compared to what it used to be. Right now, when you look at our last year's performance, FY23, it's about 41% on exports and remaining on the domestic side. Which was, in terms of absolute numbers, about 1,400, slightly above 1,400 crores. When I look at our exports business, this is not just a few countries. We are very much spread diversely around various regions, North America, Latin America, Asia, Middle East. So, sorry, go ahead.
No, we got that. For the paucity of time, I just wanted to get a couple of more numbers out of you, Mr. Gaikwad. Good morning and thanks for joining in. I wanted a view on margins because the operational performance has been deteriorating if you look at it both sequentially as well as on a year-on-year basis, right? In Q1, your margins are now sub 13%, but you used to at one point in time enjoy even 16, 17% margins. Just trying to understand what is the expectation as we move along. Is there more pressure there on the operational front?
Morning, Sonia. Yes, I think there is pressure. And by the way, we are at about 15% odd PBT and about 11 on the PAT. And, that's a reflection of the margins, the question that you asked. we believe that we will have performances in that range in the time to come. And of course, we will try to find a better mix whenever there are opportunities. But I think that we are still in the leading group of the pack in the industries when it comes to margins.
So when you say that, you're in the leading group as far as, compared to the industry when it comes to margins, but what is your own range? I mean, what are you looking at? Do you think it would be in this 12 to 14% band? And in the domestic, margins are seeing a bit of a drag as well. So what is the expectation there over the longer term?
So our business model is such that we have to create the installed base. And therefore, when the growth is happening, we have to win the projects so that we can go later on and then add on top of it, provide lifecycle services. So till the time the growth happens, we would like to participate in building our installed base. And therefore, we would be in the same margin range that you see for some foreseeable time.
Right. So at current, at around current margins is what you'll maintain, mid-teens odd.
Yeah, hard to speculate right now. I won't want to do that. Okay. But yeah, I think that's what I would.
Mr. Gaikwad, I just want two numbers in terms of growth, because as you're indicating, the India story is, very much alive and kicking. And, that's where growth is going to come from as well. So, when you joined us the last time, you said maybe you'll grow at 2 times what India grows at. So we were just trying to extrapolate that. And I think the number we came to was early teens, 1.5 to around 2 times odd. Now, given the kind of start that you've had, do you want to revise that? Can we see growth in this year, that is FY24 for Honeywell as a company consolidated entity, grow by close to around maybe late teens? Is that possible? And just some clarity on that exports number. Last year it was 1,400 crores. This year you said how much will it go to?
I did not say anything about the next, coming year, right? I just said that last year it was 1,400 crores plus.
Yes.
And we would be, growing at the world's economic growth rate, and domestic growth is higher. Therefore, we'll see the domestic business sort of growing faster than the exports.
Okay, but for the company, you were targeting growing 2x the GDP.
Coming back.
Please go ahead.
Coming back to that point, as you can see that we are increasing our order books, the 41% that I mentioned to you earlier. Also, if you see the last year's growth, we talked about 18.5% revenue growth. And so, depending on the mix, because we do have short cycle and long cycle businesses, as I have explained to you earlier, we would turn some of that revenue in the backlog in a longer term. So we would still believe that our growth rates, we would absolutely try to achieve 2 times that of GDP. That would be our ambition. But it depends on quarter to quarter mix of the business.
Okay. I wanted your thoughts also, to look slightly far out on the renewable energy market as well. What is the kind of traction that you're seeing there? What are the new orders in the renewable energy market? Any clarity that you can give us?
Certainly. I think there are 2 mega trends on which we are continuously working on: the industrial digitalization and automation, and sustainability in the industries. And so on the sustainability side, as far as our play is concerned, it starts from providing automation to the gigafactories. There are multiple battery manufacturing facilities being talked about. We also play in the automation of electrolyzers, which are coming up in a large quantity in the time to come. We also have automation that goes into the renewable fuels like ethanol. Ethanol is coming up in a big way as a part of blending into gasoline or petrol. So I think we have a play there. We also are in the business of providing what is called as battery energy storage system, which is juxtaposed to the solar plant. So all of that sector, which I mentioned to you, and I heard you guys talking about the EVs that is a hot topic today. We provide sensors that will protect the batteries from heating up, and therefore a battery safety system that we provide. It's a small part of the whole system, but certainly that's good news.
All right, Mr. Gaikwad, very quickly, the former president of Microsoft India has joined Honeywell India. I think Anand Maheshwari. Does he have a role to play in the listed entity as well? Is there any kind of strategy change?
So Nigel, just a correction. Anant Maheshwari is a colleague, ex-colleague, and now comes back to Honeywell again. His role is that he's the president of high growth regions in Honeywell. It's a global role. He has the responsibility for China, India, Latin America, Middle East, Eastern Europe, etc. Right? So he has a much larger role to play, but he does not have a direct role in Honeywell Automation, the entity that we are talking about, and we will collaborate. Of course, we will collaborate and work together as he joins us.
Okay, all right. All the best, and thanks a lot for joining in and giving us a lot of details about the business. That's Honeywell Auto saying they aim to grow at 2 times that of India's GDP, and they're very optimistic on the mega trends, which is digitization and sustainability. Okay, those seem to be the buzzwords, and Honeywell is sort of making the most of that. Let's step into a quick break. On the other side of the break, we have Ashok Kumar Tyagi, the managing director at DLF, to discuss demand trends in the industry and the outlook for the company. We'll also have GN Gupta, the former executive director at SEBI and managing director at Stakeholders Empowerment Services, and Abhishek Dadu, partner at Khaitan & Co, to discuss SEBI's decision to review delisting norms.